The market's gaining 1.8% on Friday. We've seen some nice gains. Some of the banks coming out with results. Of course, imminent listing of Dangote Cement. So for now, it seems that investors feeling relatively optimistic.
Absolutely. I think the market has been a bit unstable for the last few weeks, but the combination of earnings released from some of the major banks, you saw GT Bank with improved results, and also UBA, and also some of the uncertainty around what's happening with the rescued banks that is clearing is beginning to kind of give us a positive stimulus.
Ike, just touching on Fitch ratings and revised Nigeria's outlook from stable to negative. Of course, this being quite a big blow for Nigeria. I mean, they're citing the excess crude accounts and the flows out of that account as one of the big issues. And we also know there's an imminent global bond that is going to come through for Nigeria. What does this mean overall for the economy?
I think, to be fair, you have to look at the amount of debt the country has in the context of its GDP. If you look at the ratio, the total debt to GDP is still around the mid-teens, 14–15%. While the rating agencies could be arguably alarmed about the withdrawals from the excess crude, the fact is also that the government has not been totally transparent until recently with the level of liabilities it has. Now trying to deal with the power sector and all the reforms that's coming in there with the privatization of the power holding company, it turns out there's quite a lot of pension liabilities, severance package liabilities that have never really hit the books of the government. So in trying to offset some of these liabilities, they clearly have to raise debt from the local markets. So part of the increased domestic debt is essentially the government finding it necessary to pay off its domestic liabilities, which have always been there but not really been accounted for. And clearly we've known that in the last couple of years there's been quite an alarming amount of withdrawals from the excess crude, and that's been challenged by the fact that with what happened, the global financial meltdown, many of the state governments have not really created a buffer economy to support themselves other than what comes from the federal system.
Ike, let's touch on Dangote Cement for a minute there. We know that it's listing tomorrow. It is there's a lot of news about it, and we know that Afrinvest is one of the advisors on the deal. Firstly, what do you make of the valuation of this stock? And of course, a lot of investors very optimistic about the prospects for this company. I mean, looking at capacity utilization and also looking at some of the projects that they are set to complete relatively soon.
I think the valuation is fair. I think it's a very constructive valuation. From the point of view of capacity utilization, you're going to see Dangote Cement go from 8 million metric tons today to 20 million metric tons of production capacity next year. Now, they're doing about 95% capacity utilization of the 8 million tons already. They will do about 50% on the new plants coming on to give you an average production of around 14.6 million metric tons next year. That would then see profits jump quite impressively from about 75 million to 120 billion naira next year. If you look at the profitability, the plants also get more efficient because the new plants are all coming on gas, and BCC has been running on low-poor fuel oil. So the combination of increased capacity and increased efficiencies, and these are plants that have been invested for quite some while, you're really just finishing them up to switch them on, would certainly support the profit momentum.
I mean, we know that the company teamed up with Benue Cement. I mean, obviously that merger that came through, some of the projects took longer than expected. We know that Dangote Cement has been citing that they're going to be finishing the projects in a relatively short space of time. Do you think that they can actually meet up to those targets that they've set out for themselves?
We are confident they will meet it. Iwese, the plant near Lagos, is opening January, February next year. The new line at Abajana is coming on stream July next year. And then we expect all the renovation and refurbishment work at BCC to be completed around November, December. We're confident they'll be able to make it this time around.
Ike, very quickly, where do you see the share price going for Dangote Cement after its listing tomorrow?
That's a $1 million question. I think it's going to be, it will probably go with the momentum of the market. There's likely to be continued volatility in the markets for a period of time. But we see Dangote as a long-term buy. And from that point of view, if your horizon is beyond 1 year, 2 years, it's certainly something to buy and keep away. But certainly it will not be immune to the volatilities of the local market, plus all that's happening in Nigeria with the political environment.